My mother had worked as a postmaster until she was 75 and was in perfect health. And we thought that we were an awfully lucky family. And then when she was 80, she got Alzheimer's disease. And she had 5 insurance policies, including the wonderful insurance that Postmasters offers. She had Medicare, she had cancer insurance. When you get Alzheimer's disease, it doesn't cover any of those things. And so we realized, you know, how much trouble we were in, and we saw what it did to her and to us.
Your chances of being in a long-term care home are probably close to 50% now. And the odds are, those are pretty heavy odds that you're going to be there.
What you need to know now about long-term care. Produced by the California Partnership for Long-Term Care, a program of the California Department of Health Services. When it comes to long-term care, most Californians still think about someone who's elderly, receiving care in a nursing home. But today, many Californians receive long-term care in their own homes. And this is not just a subject for seniors, it's an issue for Californians of all ages. This program, produced by the California Partnership for Long-Term Care, part of the California Department of Health Services, will provide you with basic information about this important subject. You'll also hear about the state's special program for middle-income Californians, the California Partnership. At the end of this program, you'll be better prepared to make informed decisions and choices to prepare and protect yourself, your family, and your future. Let's start by seeing how much you already know about long-term care. If you have a copy of our California Partnership worksheet, please take it out now. And don't worry, the simple true-false questions will also appear on the screen. Studies show that Californians have many false impressions about long-term care. Long-term care is exactly what it sounds like. Care that's provided over an extended period of time. It can be needed by anybody for almost any reason at any age. You may need long-term care because of an accident or a serious illness. Or you may simply need special support. Help to do things as you grow older, such as assistance with bathing or dressing. 33%, 1 in 3 men over the age of 65, will spend some time in a nursing home in their future. But because women are more likely to get a chronic disease such as arthritis, osteoporosis, Alzheimer's, and generally outlive men, a higher number, actually 50%, or 1 in 2 women over the age of 65, will spend some time in a nursing home. Long-term care may take place where you can receive the level of care you need to continue your normal activities of daily living. This help can be provided in your home, at a skilled nursing facility, in an assisted living or residential care facility, or in adult daycare services. A large majority of people needing long-term care of one kind or another continue to live in their own home. Let's see how you do with question number 1. True or false? Nearly 40% of individuals receiving long-term care are less than 65 years old. The need for long-term care can occur at any age. Consider Christopher Reeve's accidental fall off a horse at age 43, or former heavyweight champion Muhammad Ali, who became a victim of Parkinson's disease at age 54. This is an issue for all Californians, because 40% of Americans currently receiving long-term care are under 65 years old. Younger people require long-term care for accidents, disabling diseases, and events such as strokes. Certainly, statistics can't predict your future, but the longer you live, the greater the chance you will need long-term care. Here's our second question. True or false? Most long-term care is provided in a nursing home facility. The answer might surprise you, but it's false. In fact, for every person in a nursing home, there are 3 who require care in their own home. Surprisingly, care in your home can easily be more expensive than being in a nursing home. For example, if you should need help just 10 hours a day while your family helpers are at work, the cost can easily be $150 a day. If a visiting nurse sees you, that could add another $100. And there are always Medicare co-payments to be made and deductibles to be paid. But if you ever need nursing home care, do you know what it will cost? Get ready. In California, the statewide average rate for 1 day of care in a nursing home has risen steadily from $42 in 1980 to $88 in 1990. Currently, the statewide average has risen to about $130 a day, but it could be even higher where you live. Now, if you only need a day or two of care, you can probably pay the bill. But what if you needed care for a longer period of time? Here's our third question, true or false? The average length of stay in a nursing home is more than 2 years. According to published statistics, roughly half the persons who entered nursing homes spent 1 year or less of their lives there. And don't forget, many people struggle for years receiving care in their own homes before ever entering a nursing home. But 21% of nursing home residents will spend 5 years or more. Some people will remain 10 years or longer. The answer to our question, the average length of a nursing home stay, is actually 2.5 years. At an average cost of $130 a day, a Californian who needs just 1 year of nursing home care today can expect it to cost about $45,000. 2 years of care would cost about $90,000. 5 years would cost $225,000. Care in your own home can be as or more expensive than in a nursing home.
My mom has Alzheimer's, and when she first came to me, she was functional, but during the 4-year period of time, I've seen a steady digression of everything. I've done comparisons between home care and professional care in a care facility, and actually, in terms of dollars, it's about comparable. When my mom had money, I needed to use that money to pay for her skilled caretakers. The costs of having my mom home are extraordinary. The paper products, the food, anytime I go on an overnight, baseline for me at home is about $2,500.
So who pays? We'll see in a moment. That brings us to our fourth question, true or false? When you need nursing home care, Medicare or your health insurance policy will pay most of the costs. Contrary to what many people think, Medicare pays very little of nursing home cost, about 9 cents of every dollar spent. When Medicare does pay, it only fully pays for 20 days of nursing home care and possibly a limited amount for up to 80 more days, but no longer. Even if Medicare pays for the additional 80 days, your copay obligation will be over $90 a day. Medicare supplement plans and retiree health insurance plans typically do not pay long-term care expenses. Unfortunately, Medicare and health insurance policies only pay for skilled care, such as that provided by nurses and other licensed professional caregivers. The majority of long-term care is not considered skilled. For example, an unskilled long-term care provider could be someone who helps you move around your home or helps you bathe and dress. If you are employed, your employer's health insurance probably doesn't cover long-term care expenses. Individual health insurance policies do not pay for long-term care benefits for an extended period of time, if at all. Therefore, the answer is false. Who pays? Probably you or your family members.
Long-term care is very expensive. You have doctors, you have nurses, you have equipment, you have drugs, and then you have the facility. All of those things are negative. They're needed, but it's still a negative as far as income.
After the experience with my mother that went on for at least 5 years in trying to gather my siblings to pay for it and drain their own finances, we had to take her into the home, which again is very expensive.
My father was just requiring too much care at home, and so my brothers and I made the decision, and my mother made the decision to put him in a long-term care facility. However, it's been a financial drain on my mom and dad's retirement, and I'm watching that happen to my mom now. So even though she's not physically taking care of my father, she is having to slowly put out their savings.
I plan for long-term care because I'm 58 years old and I'm looking to stay in my home in case something happens to me.
People don't like to think about their long-term care needs. After all, it means we have to face the fact that we're getting older. We also have to think about who will provide care if it's needed. Today, our children are spread throughout the state, sometimes around the country or even the world, more women than ever are employed full or part-time. Times have changed. So have you. Today, if you require long-term care, it's likely you'll have to pay someone else for that care. So how will you pay the bills? If you had to pay for 1 or 2 years of long-term care costs in a nursing home or in your own home, you can see how quickly your savings will be used up. What are your choices? We'll examine your options next. As a Californian, you basically have 3 options. You can pay for care yourself from your own income and savings. Can you afford to pay $45,000 from your income and savings for 1 year of care? What would happen if you needed 2 years of care or 3? How long before your savings are used up? Medi-Cal, which is California's version of Medicaid, will pay for long-term care, but only after you've spent all your savings and no longer have enough left to pay for your own care. For example, if you're single, all you can keep in savings is $2,000. If you're married, other rules apply. Or you can purchase long-term care insurance. But remember, all long-term care insurance is not equal. If you do not buy a high-quality policy or one with built-in inflation protection, you could end up paying premiums for 15 or 20 years and still have to spend all your savings when you need long-term care. The California Partnership for Long-Term Care has developed a quality long-term care insurance policy specifically for people with medium levels of income and savings. The partnership is an option available to help protect your savings and provide you with affordable long-term care choices. Sandra Pierce Miller, Project Director for the California Partnership for Long-Term Care, is here to answer some key questions. First, why did the state create the California Partnership for Long-Term Care?
California State Department of Health Services is very anxious for people to realize that they need to plan ahead for how they're going to fund their long-term care costs. The cost of long-term care is about $45,000 a year today. We're anticipating it'll be 3 times that much in 20 years. For me and for you and a lot of people who have middle income, they stay in a nursing home. An average stay in the nursing home is going to wipe out every bit of assets we've earned over our lifetime. So from an individual perspective, we want people to understand the risks of needing it and the risks of their not being able to afford it.
The state legislature established the partnership program in 1992. And in fact, Californians are extremely fortunate to live in one of only 4 states offering this special partnership program.
The purpose of the partnership was to develop an alternative for people to be able to purchase affordable, quality long-term care insurance as a way to avoid significant demands on Medicaid to pay for long-term care. The partnership itself is a partnership between private insurance companies, consumers, and the State Department of Health Services, State Department of Insurance, and State Department of Aging. The partnership is based on the fact that certain insurance companies have agreed to develop a long-term care insurance policy that meets the rigid requirements of the state of California that must be included in a policy in order for the Medi-Cal asset protection to be part of the provisions. In order to have the special logo and the special approval, the good housekeeping seal of approval of the state of California. Partnership companies have not only special provisions in all their policies, but also their agents that are approved to sell partnership policies have to be specially trained.
The partnership offers 2 types of long-term care insurance policies: a nursing home and residential care facility policy, and a policy that covers care in a nursing home, a residential care facility, in the community, or at home. Partnership policies can be purchased that offer coverage which ranges from 1 year up to a lifetime. But how does a person know whether they'll need to have care for less than a year, or if they're going to be one of those folks who will need to be in a nursing home for much longer? It seems that the only way to be sure that they'll have insurance to take care of their costs, no matter how long they need to have long-term care, is to buy a policy that lasts their whole lifetime.
Medi-Cal Asset Protection solves that for people, particularly those that can't afford a lifetime coverage. What it says is that, for example, if I have assets that I need to cover for, let's say, about $100,000, I want to be able to be sure that when I pass away, I have $100,000 to give to my grandchildren. Well, I know that 2 years in a nursing home is going to cost me today about $100,000. If I buy a partnership policy, and in this case, I'm going to buy 2 years' worth. Let's say in about a month, I end up being in a situation and I go into long-term care under my partnership policy, and I'm in a nursing home for 2 years. My nursing home paid out around $90,000 to $100,000 worth of services, but I still need services, and all I've got left in the bank is my $100,000.
At this point, your partnership policy has paid out 2 years' worth of benefits, but you still need care. Do you pay from your remaining personal savings, or will Medi-Cal pay?
I come to Medi-Cal, and in my becoming eligible for Medi-Cal, Medi-Cal recognizes I bought a partnership policy. And rather than me, as a single individual, only being allowed to keep $2,000 in the bank, I can keep $2,000 plus my $100,000, that's $102,000. So that is the Medi-Cal Asset Protection.
So, if you want to shelter, say, $100,000, you can buy a policy that will pay out $100,000. Medi-Cal will not count those assets when determining your eligibility. This is an excellent feature that is only available with the partnership policy. You maintain control of your assets even if you have to apply for Medi-Cal. If you use up any other long-term care insurance policy, you would have to spend the $100,000 of savings before Medi-Cal would pay for your care. And only a policy which bears the California Partnership Policy logo offers this special asset protection feature. The partnership championed other approaches to providing benefits, and while all companies must now offer these benefits, they are automatically included in partnership policies. There's another feature of the partnership policies that's important. Before partnership policies can be sold in the state of California, the policy's monthly premiums must be reviewed by both the Department of Health Services and the Department of Insurance. Other long-term care policy premiums are not reviewed. So, consumers can be assured that a partnership policy is fairly and accurately priced. Another mandatory guaranteed feature of the partnership policy is inflation protection.
All policies that have the partnership logo must have automatically included in the price of the premium inflation protection to assure that at a time a person actually needs the benefits from the long-term care insurance policy, the services received, the benefits received are adequate.
The financial aspects of my mom's care has been a little staggering. It started out where the little girl next door was able to come in and just stay with my mom a couple hours a week, and when I realized my mom needed more care, then I got a neighbor across the street to come in, and as she needed more care, I had to get someone in the whole time that I was at school. And first, she didn't need very skilled care, and the costs were not that great. Where we are right now, she needs more skilled care, and in fact, this has just occurred the last couple months that unless I have more skilled care, my mom is at risk. So what this involves is it's gone from the little girl next door, about $10, $12 a week, to approximately anywhere between $2,000 and $3,000 a month that I'm paying for my mother's care.
It's just incredible how much it costs to be in a long-term care facility. And so it seems that, any insurance that you could get to help you out with that, you're winning, you're coming out winning.
By buying into a long-term care insurance program, I feel that I have more control over the kind of care I get. I think I will get better quality care. I think I'll have more choice in the providers that I choose. And that's really important. It isn't just that I want to be independent, I also want to be independent and have control about what happens to me, how I'm taken care of.
I took care of my mother at home for 6 years after she got Alzheimer's disease. And when I could no longer manage that care, I had to look for a board and care home, and she subsequently went to a convalescent hospital in the Bay Area, and it was financially devastating, and she couldn't make any decisions for herself. She thought she had made the right decisions and had done the right planning, but we don't want that to happen to our children. We want to do the planning now so that they can implement what we already have in place.
What you need to know now about long-term care, Part 2.
I had an elderly friend that got very sick, had to go into the hospital. He had to stay a long time. When he came out, he'd lost so much strength that he couldn't take care of himself anymore. And he ended up in a nursing home. And he didn't have insurance or the resources to pay for care in his home. I'm single. I don't have children. My family's out of state. And if something happened to me, I would be like my older friend. I'd be completely on my own. And I don't want to live in an institution. I want to live by myself. I want to live in my own home.
When it comes to thinking about long-term care insurance, there sure is a lot to think about. What can you afford today? What will you need tomorrow? What features and options do you really need? How can you learn more? By watching this program, you've taken an important first step. Over the next few minutes, we'll share some important information to help you select the coverage that's right for you and your family. Take out your copy of our California Partnership Program worksheet. Again, don't worry, the information will also appear on the screen. The selections you make now will be helpful when you sit down with a specially trained partnership long-term care insurance specialist. Here's the first thing to consider. You have a choice. You can purchase coverage that only pays if you need care in a nursing home and residential care facility, or you can select a policy that will pay for care in a nursing home, residential care facility, or in your own home. A nursing home only policy will cost you less, but limits your benefits and choice. If you are age 65, adding home care will increase your annual premium cost by at least 30%, but provides greater flexibility. Statistics show that nearly 94% of Californians who purchase long-term care insurance policies do purchase comprehensive policies.
I plan for long-term care because I'm 58 years old and I'm looking to stay in my home in case something happens to me. I have 5.5 acres in Placerville. It's wide open. I love it, and I want to stay there as long as I possibly can.
My mom has been with me for 4 years now, almost 4 years, and I chose to have her come stay with me because as her illness progressed, I wanted her to have the most dignity and to maintain her dignity and to be taken care of in the best environment possible, and I felt that my home was the best environment.
Next, how much coverage do you need? If you're considering a partnership policy because of its unique asset protection feature, you may want to start with the present value of your assets. Say you have $120,000 in investments, savings accounts, and home equity. You want to protect these assets so that you can leave them to your spouse, child, or another loved one. Here are two possible ways to obtain long-term care protection that protects $120,000 in assets. Remember that the current cost for a nursing home is about $130 a day, but you have enough income and savings to pay some of that cost, say $50 a day, or $18,250 a year. If you bought a partnership policy that pays a daily benefit of $80 for a period of 4 years, your maximum partnership asset protection would be $116,800. But what if you don't have sufficient savings or income, or you just don't want to pay part of the cost? Then a daily benefit of $110 with a 3-year policy would also provide a maximum asset protection of $120,000. We've saved the most important for last, inflation protection. Do you need inflation protection? The answer is yes. It's vital that your benefits increase with the price of nursing home care. Here's why inflation protection is so important. When you buy long-term care insurance, you must ask yourself this question. How much will long-term care cost in 5, 10, 15, or even 20 years from now? Will the coverage I buy today be adequate to pay the cost of care when it's needed? If not, you'll have to pay the difference from your savings, income, or other personal assets. Now consider this. Costs for all forms of long-term care have risen in California. No one can predict the future, but if long-term care costs increase by just 5%, compounded each year, you can expect the cost of daily care to reach nearly $260 a day by the year 2012. That's over $95,000 for 1 year of care. Without inflation protection, you'll have to pay the amount of the bill that's not covered by your insurance policy. California partnership policies all include built-in inflation protection, which means that while your premiums stay level, your benefits increase 5% each year, guaranteed. Even if you're 65 or older, you may still not utilize your long-term care benefits for another 10 years, by which time costs can increase significantly. One additional partnership advantage: the value of the assets you protect also increase each year. So if you protected $120,000 of assets today, in 14 years, your maximum asset protection will actually grow to approximately $240,000. After everything you've heard today, you may still be thinking, I sure need this, but I can wait. You can wait, but here's why you shouldn't. Your cost for long-term care insurance increases each year, typically on your birthday. The average increase is between 6 and 9% each year, so waiting doesn't save you money, it actually costs you more. There's one more important reason. Not everyone can purchase long-term care insurance. You need to qualify based on your health. If your health changes unexpectedly, you may no longer be able to qualify for coverage, or you may have to pay significantly more for reduced coverage. According to California partnership studies, nearly 25% of people who apply for policies were denied coverage. They waited too long. Please don't make the same mistake. You may also be thinking, can I afford the premiums? Can you afford not to protect your future?
I don't think you can afford not to have long-term care insurance.
You don't have to be rich to have a policy for long-term care because it is such a necessary thing for those who cannot predict the future. It's affordable, it's within reach of the average everyday person.
Well, is it just for rich people? The answer is no.
I think I got a lot more bang for my bucks by buying the long-term care insurance premium than just trying to make my own long-term care by investing more.
No other long-term care insurance policy offers the special asset protection feature that the California Partnership for Long-Term Care does.
I did it for security purposes because I feel that I'm getting older and we don't have children, and if something happened to him, then I'm on my own. And also, if something happened to me, then everything would be taken care of, even if he were still alive.
I would have an insurance policy to ensure that I would not be a burden not only on my children, but not on the state either.
I don't have to go sell my property. I don't have to go sell my car. I don't have to beg my children or ask my children for anything. Not that they wouldn't give it, but it's that sense of independence.
And seeing how much my mom needs, it's really a wake-up call to me that I need to do some serious decision-making about my own care. Whether or not I inherit my mother's illness or whether I get arthritis, whatever it is, somehow I'm going to have to face old age. And I like staying at home. I like my mom staying at home. It's a very pleasant environment.
There are so many levels of care available. Depends on your lifestyle, what you want to accomplish, and frankly the amount of money you have to spend on the policy. But in all, when you compare it to other forms of insurance, it's one of the best investments you can make.
We want to thank you for taking the time to watch this video. What should you do next? For a closing thought, here's Sandra Pierce Miller, the partnership's director.
don't disregard the information we provided to you in this video. Consider the significance of the information as it relates to you and your family and your loved ones, and inquire. Inquire with an insurance specialist, someone that's specially trained in long-term care insurance. Talk to your financial planner. Call your local number of the Health Insurance Counseling and Advocacy Program. And if you decide that the solution to your future in funding long-term care costs is insurance, long-term care insurance, don't wait. Purchase it now.
The California Partnership for Long-Term Care offers a variety of consumer guides for individuals who want additional information. To receive a copy, call 1-800-CARE-445. For further information about health insurance, call your local Health Insurance Counseling and Advocacy Program, HICAP, usually listed in your phone directory under Senior Services.